Hey, good morning, everyone. In this video, we're going to go through the steps for closing for the buyer side. So, if you're looking to purchase a house in the near future, so this video might be helpful for you. So, we're going to go over the steps for you. All right. So, step number one is your pre-approval. Pre-approval gives you tells you exact amount that you qualify for. So you're not, just looking for a property and you have no idea how much you actually qualify for. So you want to get pre-approval from a loan officer. You can go to your own bank that you're banking with for quite some time, or you can look for a mortgage broker online as well. When you're getting a pre-approval, you are getting to know how much loan amount is going to be, how much down payment you're going to put down, what kind of program that they're going to give you. Is it FHA program? Is it conventional? And what kind of term are you getting? Are you getting a 15-year term? Are you getting 30-year term? So with your loan officer, you can review this step. If you don't want to get pre-approval, because a lot of people are scared that they don't want to do hard inquiry on their credit check, so you can get pre-qualify. Where pre-qualified, the loan officer simply is looking for your credit score based on your credit karma, and they're not doing any hard inquiry and looking at your income and telling you based on that, this is what you're going to qualify for, right? They're not pre-approving you, but you still have some sort of idea how much you qualify for. Why is this important? So you don't waste your time, you don't waste your realtor's time, and you don't waste the seller's time. You don't want to look for a property and you really like the property and you want to put in an offer, and all of a sudden you find out that you cannot even buy that, right? You don't qualify for. So always know the amount. So if you think that you purchasing a house for 600,000 and the banks, you go to two different lenders and both of them tell you you don't qualify over 500,000, so obviously you cannot get $600,000 house at this moment. Maybe in the future, yes, but not right now. So always know how much you qualify for, and go over your programs. There are a lot of programs out there, FHA and conventional, that allows you to put down 3%, 3.5%. A lot of people think that for conventional loans you need to put 20% down. That's not the case. You could put lower than that, but you have to talk to your loan officer about that. All right. And once you have that pre-approval letter, that pre-approval letter is usually good for 6 months. So when you get that pre-approval letter, you want to start searching for your properties. So that brings us to step number two. Your search begins, right? On this level, you want to work with the realtor, right? Because a realtor, when the realtor is representing the buyer, usually they don't get any commission from the buyer side. It's always coming out from the seller side, and the seller already has negotiated with the listing agent, telling them that, hey, for example, that I'm going to give you 4% total commission, 2% goes to the listing agent, and 2% goes to the buyer's agent, for as an example. So obviously, one realtor can show you 10 properties, 20 properties without charging you anything. But once your offer gets accepted, the realtor will get paid from the buyer's side, from the seller's side. So buyer will not pay any fees for them. So while the realtor, like if you're working with one of our realtors, as soon as you tell them what type of property you're looking for, which area you're looking for, and your budget, they set up alerts in our system, and the system will start sending you emails saying, "Hey, this is a new property. Take a look at it." While the realtor is doing this, you're more than welcome to use your other apps right now, just like Zillow, Trulia, Redfin, or any other property um, websites. So, and if you see something on Zillow or Trulia, you can send it to your realtor as well. Hey, I see this on Zillow. Could you schedule a showing for me? So try to stay loyal with your realtor, because that's the person that's going to negotiate for you and is going to take you to the closing and help you every step of the way. So step number two, your search begins. All right. And once you find a property that you like, you want to schedule a showing with your realtor and make an offer. So the ratio is usually 10 to 1. So you look at 10 properties and you want to put in one offer. It could be less, it could be more, but that's the average that we see. Okay. And in the offer letter, you want to put in a solid offer. Right now, we are headed towards a buyer's market, and you want to put in solid offers. You don't have to go over listing price right now. You want to start off at maybe, let the realtor do the comps and put in a solid offer for you. When you're signing the offer letter, you're going to sign agency disclosure as well, saying that, hey, the realtor is representing you, and you're going to give that pre-approval letter that you have from your loan officer to your realtor. Okay. And the realtor is going to send these documents to the listing agent. Some listing agent will ask for proof of funds. So let's say you purchasing a house for $500,000 and you're putting down 20%. That's $100,000. So they might want to see proof of funds that you actually have $100,000 in your account. So you can just send a screenshot of your statement showing that you have that money available. So in this steps, basically you can do as many showings as you like. Once you like the property, you want to put in your offer, a solid offer. Okay. Once your offer is accepted, you want to schedule your home inspection. The home inspection is paid by the buyer, and typically it's around $300 to $500 for the inspection. And it is for your knowledge to see what is right and wrong about the property. If there's any structural damage, if there's minor or major renovation needed, and the inspector will go through and give you a long list of things that needs to be fixed. And from there, let's say if there's something major, your agent will negotiate with the listing agent and try to bring down the price much as possible, right? So once you have your home inspection done and you have negotiated, if needed, and in the seller's market, we were not able to negotiate much, and even in seller's market, this home inspection was getting waived, meaning there were 20 offers on one property, and maybe 5 or 10 of them will not have any home inspection contingency, where the seller doesn't have to worry about it. They're selling it as is. Doesn't matter what kind of damage it is. The buyer is saying, "I will take the responsibility, and I will just go ahead and move forward with the deal." Now, in buyer's market is the other way around. We want to do a home inspection, find out if there's any flaws, and negotiate the price down much as possible. Okay. Again, you got to stay reasonable to make the deal happen. So once the inspection is done and you both parties are on the same page, uh, you want to go under contract. The buyer's attorney will have a check for the earnest deposit. So when you're saying I'm putting down 10% or 20% down payment, out of that whole down payment, you have to put down a little bit as earnest deposit to show that you're serious about this transaction, and it shows that that's like a security deposit for them, so that after 2 months or so, you don't want to just walk out of the deal and you have nothing to lose and you wasted everybody's time. That's why the earnest deposit is really important there. So the buyer signs the contract first and have their earnest deposit check, certified check, with the buyer's attorney. And the buyer's attorney will mail that check and that contract to the seller's attorney, and the seller will sign. Once both parties signs the contract, that is a fully executed contract. Okay, you know that the deal is being done now. So once both parties have signed the contract, it is all up to the loan officer now. So the loan officer for the buyer will provide a commitment letter that usually happens within 7 to 10 days. Okay, depending on the lender and depending on the loan officer itself. The commitment letter simply says that, hey, we have reviewed this borrower's information, their income, their assets, and all that, and we're committed to providing you, this borrower, with the loan amount that we have promised. So that commitment letter is very important to the contract. Because let's say that they don't have this commitment letters and they cannot get the loan for some reason, they can get their earnest deposit back. If they have not gotten the commitment letter yet, then they can, if they do get the commitment letter and they still want to back out, it's harder to do that. So the commitment letter is very important. Okay. After the loan officer has provided that commitment letter, your next step is your appraisal report. The loan officer will also order the appraisal report, and that is what the bank is going to say, hey, we have done the comps for you. You're putting an offer for $500,000, and we think that either it is $500,000 or it's more or less. If it's if the appraisal value is more than that, let's say the bank comes back and say, hey, we think it's 530, now you have made a good solid offer. You're putting an offer for 500,000. The bank is saying it's 530. That's good. If it's the other way around now, you're purchasing a house and you're saying I want to purchase for 500,000, but the bank says 480 is a $20,000 short, right? Then you would have to come up with that difference because you're saying that I'm willing to pay above the market price, because the banks will are willing to give you the money, but they want to assure that hey, you're making the right move. The realtor can do his comps, but when the banks do it, they will do it more thoroughly, I guess, right? So that's your number 8. And the buyers does have to pay for this appraisal report. Okay. If you guys have any questions, just put in the chat there. All right. The next will be your title report. Now your buyer's attorney will order this title report, and the title report will uh, basically is a history for that property. It will check for violations, open permits, for liens, any um, any sort of bad things that you can think of for the property. So you have purchased the property, you have no idea what kind of violations it had, or if it had a permit open like 20 years ago, or if it has liens from back in the days that the seller never took care of. This is the time that the title report will show, and the attorneys will have to handle that and negotiate if needed. And the words that you're looking for is clean title. If the attorney says, hey, we got the title back and is a clean title, meaning that there's no issues and you guys can move forward with the deal. Okay. All right. Next is for your loan officer. The loan officer, when they already provided a commitment letter saying that, hey, we will give you this, 400,000, 500,000, whatever the loan amount is, but we need these conditions cleared. So there might be, a list of 5, 10, depending on the lenders. They will review your file and say, hey, we need to explanation for this, for that. We need it might be a large deposit that they need clarification on, but there will be conditions. So you go line by line and you work with the loan officer and you try to clean those up as soon as possible. The faster you clean or you provide your conditions to the loan officer, the faster your file will close. Okay, once you have provided all the conditions, and the loan officer will tell you eventually that hey, you're clear to close. And clear to close, when you hear that, that is a good news from your buyer side and for all the parties for that matter. So while that is happening, you want to get home insurance quotes. So when you're purchasing a house, right, you need to have insurance, and you want to have insurance for that home throughout the time that you have that home itself, because it will protect from fire damage. For there's a list of things that will protect that house for, and you need to get home insurance, and the bank will require it too. So you don't want to purchase a house and then 2 weeks later the house burns down and nobody has any insurance on it. So the bank will require that you have insurance, home insurance, and you need to at least get quotes before the closing. So you should be doing this on your own, shopping around with different agencies and getting home insurance quotes. Once you get those quotes, review the coverages. So let's say you're getting a loan for $400,000, you need the coverages for $400,000. Some banks will require even higher coverages. So lender will tell you, hey, we need this on the coverage, and that's what you will request from your home insurance agency. Okay. And the effective date is usually the closing date because that's your ownership starts and that's when the home insurance will start. All right. All right. So once you have done that, you will hear that, hey, we are cleared to close. You have your home insurance quotes and everything, and we're going to schedule a closing. The seller's attorney, the buyer's attorney, and the lender's attorney, all three of them will, email back and forth and see their availability and see where they want to schedule, which office they want to schedule it at. And they usually try to do it where it's convenient for majority of the parties, right? So let's say the seller's attorney is deep in Long Island, but everybody else is in Queens, they will try to do it in Queens. Okay. So once you have that date set, you have, your date and time for the closing. Now your realtor will schedule a final walkthrough, right? The finals walkthrough is scheduled with the listing agent, and you reviewing the house once again, just like how you saw it when you were about to go under contract. And maybe 45 days has passed, and you don't know what's wrong with the property now. Maybe the hot water is not working. Maybe there's a new leakage or any sort of things. So that's when the final walkthrough is super important, and there's usually a checklist that the realtor will provide to you, and you just check that off and you sign it, making sure that you guys are on the same page. But let's say you already have the schedule showing, and in the final walkthrough there is a leakage in the bathroom, right? Now the attorneys have to, work that out and see there's a leakage and it's going to cost $250 or $500 to get that fixed. So the buyers and the buyer's attorney will maybe hold $500 in escrow until that is fixed, or the seller will say, hey, I'm not going to fix it, I'm going to just give you that $500 now. As long as it's in buyer's favor, that is perfectly fine. Okay. That's your final walkthrough. So just review that thoroughly. All right. So before the closing, you want to review your closing disclosure, known as CD, with your loan officer. So loan officer will give you a CD, and you want to go line by line and just ask for the loan officer to explain. Hey, I see this $500 cost here. What is this for? I see this $1,000. What is this for? And they will go line by line. And you want to compare that CD with your loan estimate that you got when you got your pre-approval and you were doing your application. You got a loan estimate. So even the government is very strict on that, because the government doesn't want the loan officer to provide you with a different number initially, and then on the CD is completely different. You don't want to go through that, right? So that's why whatever numbers that they provided on loan estimates should be very similar to closing disclosures. If it's lower, let's say they said you had to bring $80,000 to the closing, and on the loan estimate, but now on the CD is $70,000. That's good, $10,000 less. But if it's the other way around, you want to question your loan officer and why there's a difference in that. Okay, that's your CD. So once you have done that, and you're gonna go to the closing table. So before you go to the closing table, just make sure that you have your valid photo ID, you have your certified checks. You're gonna review and sign the closing documents with the attorney. Usually, the buyer signs a lot more documents than the seller, but that's what it is. And once that is done, you got your keys. Okay. And that will do it. Congrats, you're going to be a homeowner now. Now you have the responsibility of paying the bills and building your equity over time. And that will do it, guys. Let me know if anyone has any questions on this. All right. All right, guys, that'll do it. I hope this helps.